Vietnam's quiet rise. Could Vietnam lead the future of Southeast Asia's economy? For many years, when people talked about the world's factory, China was the first country that came to mind. When discussing financial hubs, Singapore was usually at the top of the list. And when it came to population size and industrial ambition, countries like Indonesia and Thailand were often seen as stronger than Vietnam. But over the past 5 to 10 years, something very interesting has been happening quietly in the background. Vietnam has slowly become one of the most important links in the global supply chain. Not as loud as China, not as wealthy as Singapore, not as populated as Indonesia. But Vietnam is rising in a very different way. Stable, practical, flexible, and increasingly strategic. What makes this even more interesting is that this rise is not just based on optimism or national pride. It is backed by very real numbers and global business decisions. Samsung has invested tens of billions of dollars into Vietnam. Apple continues expanding its supply chain there. Major technology companies are shifting production into the country. Highways, airports, and ports are being built at an incredible pace. Exports continue breaking records. And Vietnam is gradually becoming a new technology manufacturing hub in Asia. The big question now is, could Vietnam become the country that helps shape the economic future of Southeast Asia? There's a fascinating reality behind Vietnam's rise. Most people know Samsung as a South Korean company, and that's true. But today, a massive part of Samsung's global manufacturing operation is actually based in Vietnam. According to international reports, more than half of Samsung's global smartphone production now comes from Vietnam. That means when someone in the United States, Europe, the Middle East, or Southeast Asia holds a Galaxy phone in their hand, there's a very high chance it was made in Bac Ninh or Thanh Nguyen. Samsung has already invested around 24 billion USD into Vietnam and operates multiple giant factories as well as a major R&D center in Hanoi. And Samsung is not alone. Apple has also been accelerating its expansion in Vietnam. Suppliers such as Foxconn, Luxshare, Pegatron, and Goertek continue expanding factories across northern Vietnam. Today, AirPods are heavily produced in Vietnam. Apple Watch production lines are operating there. Parts of MacBook production are being tested. More electronic component manufacturing is moving away from China. This is not happening by accident. It reflects one of the biggest global trends right now, China plus one. After COVID-19 and growing tensions between the United States and China, global corporations realized something dangerous. Depending entirely on China could become a huge risk. If supply chains were disrupted, entire industries could freeze overnight. So companies began searching for another manufacturing base, and Vietnam quickly emerged as one of the most attractive choices. One major reason is cost competitiveness. Compared to China, labor costs in Vietnam are still significantly lower. At the same time, Vietnam's workforce is considered highly adaptable and increasingly skilled. Vietnamese workers are often praised for learning quickly, working hard, and adapting well to technology-focused industries. And that matters a lot, because electronics manufacturing is not just about cheap labor anymore. It requires precision, discipline, fast training, adaptability. And Vietnam is performing surprisingly well in these areas. Another huge advantage is geography. Vietnam sits right next to China. That may sound simple, but strategically it is extremely important. Most electronic components in the world still come from China. So when companies build factories in Vietnam, they can import components quickly, reduce logistics costs, stay connected to existing supply chains. That's an advantage many other countries simply do not have. Vietnam also offers something global corporations care deeply about: stability. Large companies hate uncertainty. They worry about political instability, long-term protests, constantly changing regulations, internal conflicts. Vietnam has managed to create a sense of long-term stability for investors, and that gives multinational corporations confidence to invest billions of dollars into the country. But perhaps the most important shift is this: Vietnam is no longer just a low-cost assembly destination. That is a very big deal. Years ago, Vietnam was often viewed mainly as a place for cheap manufacturing, garments, footwear, simple assembly work. But things are changing rapidly. Samsung has already placed its largest Southeast Asian R&D center in Hanoi. Thousands of Vietnamese engineers are now involved in developing foldable smartphones, software systems, camera technology, display technology. Recent reports suggest that around 2,400 Vietnamese engineers have participated in developing Samsung flagship products. That signals something much bigger. Vietnam is slowly moving from simple assembly to becoming part of the global technology value chain. And that transition is extremely important, because no country becomes truly wealthy by relying only on low-cost labor forever. To move higher, a country needs technology, engineers, research, strong domestic companies. And Vietnam is beginning to enter that stage. At the same time, Vietnam's infrastructure is transforming at a speed the country has never seen before. Anyone who left Vietnam 10 or 15 years ago and came back today would immediately notice the difference, especially in transportation and logistics. Back then, highways were limited, transportation was slow, logistics costs were high, ports were less efficient. Today, Vietnam is entering a major infrastructure boom. The North-South Expressway is becoming the new economic backbone of the country. As the highway network expands, goods move faster, logistics costs decrease, regions become more connected, industrial real estate benefits massively. A strong economy needs strong logistics. China's economic explosion was heavily supported by enormous infrastructure investment. Vietnam now appears to be following a similar path. Vietnam's ports are also becoming increasingly important in global trade. Ports such as Haiphong, Kai Mep, Thi Vai, Da Nang are playing bigger roles in international shipping and manufacturing supply chains. Northern Vietnam, in particular, has been growing rapidly thanks to the electronics boom. Thanh International Airport could also become one of the country's most important infrastructure projects in decades. If managed successfully, it may become far more than just an airport. It could evolve into a logistics hub, an international transit center, a major growth engine for southern Vietnam. Vietnamese cities are transforming quickly as well. Ho Chi Minh City remains the country's largest economic engine, but the city is gradually shifting away from a traditional economy and moving more toward technology, finance, services, startups. Meanwhile, Hanoi is becoming a growing center for technology, electronics, research and development, strategic administration. Northern Vietnam is industrializing at an incredible speed. Some experts believe the Bac Ninh, Thanh Nguyen, Haiphong corridor is evolving into a new technology triangle in Southeast Asia. Haiphong itself has become one of Vietnam's fastest-growing cities. Its strengths in ports, industry, logistics, proximity to China are helping attract large amounts of investment. But despite all this momentum, Vietnam still faces major weaknesses. And this is probably the most important part of the conversation. Talking about potential is easy. Actually leading Southeast Asia economically is much harder. One of Vietnam's biggest challenges is its dependence on foreign direct investment. Today, most of Vietnam's technology exports come from foreign companies. Some studies estimate that foreign invested companies account for around 98% of Vietnam's electronics exports. That means Vietnam manufactures a huge amount of products, but the biggest profits still belong to foreign corporations. Samsung manufactures in Vietnam, but the core technology belongs to South Korea. Apple produces in Vietnam, but the brand value still belongs to Apple. If Vietnam cannot build strong local technology companies, globally recognized domestic brands, local supply chains, then moving to the next level will become difficult. Another challenge is supporting industries. Many factories in Vietnam still rely heavily on imported components from China. That limits how much value Vietnam can actually capture. Foreign businesses operating in Vietnam have also mentioned that finding high-quality local suppliers is still not easy. Labor productivity is another major issue. Low labor costs are an advantage in the beginning, but relying only on cheap labor is not sustainable forever. As incomes rise, Vietnam will eventually need to compete through technology, innovation, productivity, not just low costs. There is also the risk of the middle income trap. Many countries grew quickly during their early development stages because of cheap labor, foreign investment, infrastructure expansion. But becoming a truly wealthy economy is much harder. Many nations became stuck in the middle income stage for decades. Vietnam will need to avoid that path. Still, Vietnam has one enormous advantage right now: timing. In economics, timing can change everything. China rose during globalization. South Korea rose during industrialization. Singapore rose through finance and trade. And Vietnam today stands at the center of several major global shifts: supply chain restructuring, US-China tensions, the rise of AI and electronics, the movement away from China. This moment is extremely rare. If Vietnam uses this opportunity well, the country could enter a very powerful growth era over the next 10 to 20 years. And perhaps the most fascinating part is this: Vietnam's transformation is no longer just a prediction. It is already happening. From industrial zones operating day and night, to highways stretching across the country, to crowded ports full of containers, to young Vietnamese engineers contributing to global technology products. All of it points toward one reality. Vietnam is no longer simply a promising economy. It is slowly becoming an economy with real influence over the future of Southeast Asia. There's a very interesting question that many people have started asking in recent years. Why is Vietnam choosing this moment to aggressively push economic development? Because if we look back at history, Vietnam has always wanted to grow. 10 years ago, it wanted to grow. 20 years ago, the goal was already there. Even decades earlier, industrialization and modernization had always been national priorities. But what makes today different is this: Vietnam is now standing in front of a very rare window of opportunity, created both by global changes and by the country's own internal progress. And in economics, countries do not rise only because they work hard. Sometimes they rise because they appear at exactly the right historical moment. China exploded during the age of globalization in the 1990s. South Korea accelerated when the world demanded electronics, automobiles, and heavy industry. And today, Vietnam is standing right in the middle of a global restructuring of supply chains, technology, and manufacturing. That's the first big reason. The world is entering one of the largest economic restructurings in decades. Before 2020, the global economy depended heavily on China. For many years, China was essentially the factory of the world. Phones, computers, electronics, clothing, industrial components, a huge portion of global manufacturing came from China. This helped China grow incredibly fast, but it also created a dangerous level of dependence. Then COVID-19 happened. When China locked down major cities, global supply chains were suddenly disrupted. Factories lacked components, containers piled up at ports, shipping costs exploded. For the first time, many companies in the US and Europe realized something risky. If the entire supply chain is concentrated in one place, the whole world becomes vulnerable. Bloomberg, Reuters, and Financial Times all published major analyses about how multinational corporations began rethinking their manufacturing strategies after the pandemic. A term started appearing everywhere: China plus one. In simple terms, companies no longer wanted all their production concentrated in China. They began looking for at least one additional manufacturing base. And this became a massive opportunity for Vietnam. Because when the world suddenly needs a new manufacturing hub, not every country is ready to step into that role. To become part of the global supply chain, a country needs many things at the same time: a large workforce, competitive costs, political stability, access to international trade routes, the ability to rapidly build infrastructure, and most importantly, investor confidence. Vietnam happened to have many of these advantages. That's why foreign investment into Vietnam surged after 2020. Samsung continued expanding. Apple strengthened its Vietnam supply chain through partners like Foxconn, Luxshare, and Pegatron. Intel expanded chip operations. LG accelerated electronics production. Amkor invested in a major semiconductor factory in Bac Ninh. Even Nvidia has shown growing interest in Vietnam. These are not small investments anymore. They are multi-billion-dollar commitments. According to Vietnam's Ministry of Planning and Investment, foreign direct investment inflows have remained consistently strong in recent years, especially in technology and electronics manufacturing. What makes this even more important is that Vietnam understands something crucial. This opportunity will not last forever. If Vietnam moves too slowly, the investment wave could shift toward countries like India, Indonesia, Mexico, or other fast-rising competitors. This is essentially a race against time, because once global supply chains become deeply established in one country, they become extremely difficult to relocate. Take Samsung as an example. Once a company has built massive factories, hired hundreds of thousands of workers, created logistics systems, and developed supplier networks, the chance of leaving becomes very small. That means whichever country successfully captures this wave of investment today could benefit for decades. This is why Vietnam is moving aggressively right now, not just for short-term growth, but to secure its position in the future economic map of Asia. Beyond supply chain restructuring, the world is also entering a major technological transition. Artificial intelligence, electric vehicles, battery technology, semiconductors, robotics, smart electronics, all of these industries are creating enormous demand for new manufacturing centers across Asia, and Vietnam does not want to miss this wave. History shows that every major technological revolution creates new economic winners. Japan rose through automobiles and electronics. South Korea rose through semiconductors and technology. China exploded through large-scale manufacturing. Now Vietnam is trying to position itself inside the next global technology wave. That's why Vietnam has recently been talking much more about semiconductors, AI, digital transformation, high-tech industries, green economy development. Because if Vietnam misses this moment, it risks remaining stuck as a low-cost assembly economy. But if it succeeds, it could move much higher in the global value chain. Still, external opportunity alone is not enough. No country can rise strongly if its internal foundation is not ready. And that leads to the second major reason. Vietnam's internal strength today is far stronger than it was 10 or 20 years ago. If we go back to the early 2000s, Vietnam still faced major limitations. Infrastructure was weak. There were very few highways. Logistics costs were high. Ports were underdeveloped. Airports were overcrowded. Transporting goods between provinces took much longer. At that time, even if Vietnam wanted to attract major investment, it struggled to compete. Because global corporations do not only look at labor costs, they look at the entire ecosystem. For example, a smartphone manufacturer asks questions like, can goods move quickly? Are ports large enough? Do highways connect efficiently? Is electricity reliable? Is logistics efficient? If those systems are weak, large-scale production becomes difficult. But today, things are changing rapidly. Vietnam is now experiencing one of the biggest infrastructure booms in its modern history. Massive projects are being developed simultaneously. The North-South Expressway is gradually becoming the country's strategic transportation backbone. Thanh International Airport is expected to become Vietnam's largest aviation hub in the future. Ports like Hai Phong and Kai Mep Thi Vai are becoming increasingly important in international trade. This creates a huge economic impact because better infrastructure means lower logistics costs, faster delivery times, stronger competitiveness, and a more attractive environment for foreign investors. A strong economy needs strong circulation. Infrastructure is the bloodstream of economic growth. China once invested massively in infrastructure to fuel its economic rise. Vietnam now appears to be following a similar path. Besides infrastructure, Vietnam also has another major advantage: a young population. According to many international studies, Vietnam is still enjoying its golden population period. And that matters a lot, because many Asian countries are already aging rapidly. Japan is aging. South Korea is aging. China is beginning to face demographic pressure as well. Meanwhile, Vietnam still has a relatively young workforce. That is extremely attractive to businesses. Industries like manufacturing, technology, and services all need young labor to grow. At the same time, Vietnam's middle class is expanding very quickly, and this is something multinational corporations are paying close attention to. In the past, many companies came to Vietnam mainly to manufacture products. Today, they increasingly see Vietnam as a future consumer market as well, and that is a huge shift. As incomes rise, consumer demand also grows. Cars, smartphones, tourism, e-commerce, financial services, entertainment. All of these sectors could expand dramatically. That's why many corporations are not only building factories in Vietnam anymore, they are also expanding retail, commerce, and service operations inside the country. They see the long-term potential of a fast-growing market of nearly 100 million people. Vietnam also offers something very valuable in economics: stability. For global corporations, stability is incredibly important. Many companies are willing to accept slightly lower profits if the investment environment is stable and predictable. Because what businesses fear most is not lower profit margins. It is uncertainty. And Vietnam has managed to create a relatively stable image for international investors. That's one reason many corporations are now making long-term commitments in Vietnam rather than short-term bets. Of course, despite all these opportunities, Vietnam still faces major challenges ahead. One of the biggest is the risk of depending too heavily on foreign companies. Today, most of Vietnam's technology exports still come from foreign-invested businesses. That means Vietnam produces a huge amount, but much of the largest profit still goes overseas. This is one of the most important challenges Vietnam must solve in the future. If Vietnam wants sustainable long-term growth, it cannot remain only an assembly hub forever. It must eventually build strong domestic technology companies, powerful brands, local supply chains, and real research capabilities. That is the hardest transition. Labor productivity and workforce quality are also major issues. Cheap labor works as an advantage during early development stages, but in the long run, countries become wealthy through technology, innovation, creativity, productivity, not simply low wages. Otherwise, economies often fall into what economists call the middle income trap. Many countries grew rapidly for a while, then stagnated for decades because they failed to upgrade their economies. Vietnam is trying to avoid that outcome, and perhaps this is the biggest reason why Vietnam is accelerating economic development right now. Because Vietnam understands that historical opportunities do not appear often. The world is changing, supply chains are shifting, technology is reshaping the global economy, and Vietnam is trying to secure its place in that transformation before it is too late. If it succeeds, Vietnam could enter one of the strongest growth periods in its modern history. But if it misses this moment, the gap between Vietnam and the region's larger economies could remain for many more decades.